Hi, folks. Welcome to the Weekend Investing Daily Bite of 12th of May, and the markets completely on fire. While there is no talk about, uh, this operation having ended, it does seem like, for all practical purposes, it has ended. The Air Force continues to say that we are still in operation. There are a lot of reports floating around suggesting that some nuclear sites also have been impacted, and if that is the case, then the enemy is completely decimated. So there seems to be a big sigh of relief in the markets, and a lot of shorts have been caught with their pants down. We'll talk more about this in the second half of the video, along with what other global cues have caused today's market move. Do read the disclaimer fully and do subscribe to the channel. Where is the market headed now? So markets are going up like the BrahMos rocket, 3.82% up on a single session. This has not happened in the last 4 years, I believe. And you can see that the continuity of this run that we had in the beginning of April, consolidation, and now this run again has potential to go to previous highs. Nifty Junior also up 4.08%, chart looking very good. Mid caps up 3.75%. It has cleared the previous highs and is now at the January high to be taken out. Small caps also up 4%, not as good as mid caps in terms of clearing the recent high, but nevertheless a good gap up. The Nifty Bank Index is also up 3.3%. Nifty Bank Index was anyways at all-time highs, and it has again moved close to that mark at 55,000. Gold was slammed down. We'll see the reasons why in the second half of the video. 3.9%, a big slam down. So I think gold will probably take a long time to consolidate and move up again. So that is a short-term hit on gold. Advanced decline trends completely in favor of advances, 471 advances, and you can see why. All the Nifty components virtually up, IndusInd Bank down, and Sun Pharma down. Pharma is down because Trump is calling for slashing pharma consumer rates in the US. That is likely to impact some pharma exporters from the subcontinent also, and that impact is not yet clear. There's only a very rough announcement that is being made. Other than that, banks and IT especially was leaping up. In the Nifty Next 50 space, also you see that some profit taking in HAL happened. DB's Lab also down, but other than that, all sectors, all stocks moving up very very rapidly. In the sectoral trends, you can see the highest gainers were IT stocks, 6.7%, metals 5.9%, real estate 5.9%, capital market 5.7%, tourism 5.6%. Virtually no sector was down. Pharma and defense being the sort of flat ones. Pharma, of course, as I told you, the reason, and defense also, the buzz now will get over, and defense stocks may rest. IT stocks completely, going ballistic. Oracle 9%, Coforge 8%, Persistent 8%, Infosys also 8%, LTI Mindtree 7%. The reasons for today's roarback, we can go deeper into this. So, one of the key reasons has been that Indian markets held on very well during the conflict. So, while the conflict was on, only on the last day virtually did we really gap down and stay down. Other than that, we were maintaining reasonable, breadth all across, and potentially on this day we created a lot of shorts. Maybe some of you who maybe FNO traders would know from open interest positions that this day was essentially a start of a downfall kind of a trend that was being seen at, and the complete reversal of that happened with the virtual short most short-lived war, I would say 4 or 5 days, and we're up 3.8%. And even today when the markets opened, it did not stop at the first hour. It just kept going on and on and on and on. So other positive cues that came through was the US-China trade deal. So the deal is perhaps starting to happen or no, but uh, as has been the case, the US administration is very quick to tweet about it, whether or not there is anything on the ground. So they have claimed that there is substantial progress, Both sides have claimed that they will bring down the tariffs substantially for 90 days, and that will give time for them to negotiate it finally. So this basically, this entire logjam that was there, that nobody was blinking. In fact, US was blinking a few times, but China was not blinking, and China also probably uh, giving in, because China is also going to bleed if there was no tariff trade deal that would have gone through. So I think both blinked, and both basically have agreed to give each other more time with lower tariffs for that time period, and that gave global equities a huge lift. So all countries you can see here, whether it was Nifty, whether it was Hong Kong, whether it was Euro stocks, whether it was Taiwan, Paris, Germany, everything was moving up as of afternoon today. And the entire US trade progress basically has lifted a huge, uh, you know, overshadowing concern, at least as of now, that yes, there is hope that this deal will go through and the world may come to normalcy. The US futures are also up 3 to 4%, and essentially trade can, if trade resumes normally, and they are able to find some negotiation. Now it seems like they will be able to find, because from 145% US is saying that we are willing to come down to 30, and Chinese counterpart has also said that we are willing to negotiate on the tariff that they had put. So it does seem like that there will be some more negotiation and they could come through. The other thing that came around, of course, was you know the oil price started to tick up again, not because of India, Pakistan, but because of uh, this global winds of shift that happened because of US China murmurs, and renewed demand and global cooperation caused dollar index to fly up. It caused global oil prices to start ticking up, not too big a tick, but yet 3%, and also caused risk on assets like gold to collapse. Now, what is going to be very interesting to see going forward is that whether Indian market, in the light that suddenly dollar trade is in the limelight, dollar index is going up, dollars are likely to flow towards US once again. Will India's this move will get stunted because of that? That will be the key, sort of, in the next few days, to see whether our this flight that we have taken today, is it only a flash in the pan, or it does it have more feet? The good thing about the Indian situation today was there was a sovereign rating upgrade also. So Morningstar DBRS has upgraded India's sovereign rating, and long-term foreign and local currency ratings have been raised. So all these small things add up, and suddenly now there is no negative news to feed the market. So you need, to create that fear in the market for sellers to justify their position. They need something to latch on to, some negative news. Right now, there doesn't seem to be any. The border story is gone. The China US story is gone. The ratings upgrade has happened. So maybe earnings will be the story, and monsoon is likely to come normal so far. So there needs to be some new now cue, because of which. And this another one is the domestic engine. So SIPs have hit a historic high. So April 2025 inflows have come in at 26,632, highest ever SIP inflows. Despite so much volatility in the market, despite so much of uncertainty in the market, the highest SIPs have come. So 2.72% month on month SIP flow growth, 45% year on year growth. That is the fastest growth since FY18. So India is believing in India. Is this the launch pad for a new big wave? Is that a possibility also? So we really don't know how it will pan out at the end. And of course, across the board, there was participation today, as I showed you earlier as well. IT, real estate, metals, capital markets, all flying extremely hard. So what are the charts basically conveying? Charts are basically saying that the extreme weakness is certainly over. If we had to really break down, we would have done so last week. With the war looming on Indian markets, if the markets did not fall in any meaningful way, it was telling you that the undercurrent is strong. Now, where this chart is going to end. Yeah, are we going to take out the previous high in the next, I don't know, few weeks, or are we going to stutter around here, perhaps do consolidate here and then go up? It will probably depend in the next few weeks. I think the market is very well poised right now from a technical perspective, and FII flow probably again will become the joker in the pack, where if US dollar is going up, whether FII flow will continue in a big way or not. The weekly candle on the Nifty is looking quite good, although today was just the first week of the first day of the week. But you can see in the last 6 weeks, we've had only 1 week, and that too a war week. So from all perspectives, the Nifty chart is looking very, very strong. And the essentially the fact that we are about to break out above this December high, this point right here, tells us that the market is in a very, very strong situation right now. So 24,900 is the resistance to watch out for, and above that we might make a scamper towards all-time high. That is certainly a possibility. So what should investors be doing? So don't react to news. Market swings both ways. Stay with your strategy. Don't jump just because today market has jumped up. Gradually always bring in money. Reversals always bring new leaders. So now this new wave that has started, look for new leaders. Don't just get stuck with older stocks. uh, the old stocks may or may not move going forward, but the new leadership may emerge out of this. And use adaptable strategies, so they will be adapting to the changing situation, and basically let rules and strategies take you forward from here. So what do you think about the markets day to day? How did you react, and where do you think markets will be towards the end of May? Let us know in the comments. And thank you so much for watching, and do like and share these videos and subscribe to the channel. Thanks. Bye.